Here's what I use for entry. You can use it. You can design up your own. You can find it on the internet for free. It depends on what platform you have. All right. So it's called the TTM trend for entry, and it's our version of a Heikinashi, and it's just a Japanese candlestick methodology of it paints these bars. Instead of candlesticks, it just paints them either red or blue. All right. So in this example, we've gapped up. It's a Thursday. Then I'm going to look on a 50-tick chart. This is the key. On a 50-tick chart, this is important. I'm going to wait until I get 2 red bars. Okay, so right there. That's when I would short it. Okay, so this is the open. This is the open here. They were all blue. I had to wait until I had 2 reds in a row. And then I'm going to short that. I'm going to use a 20-point stop loss. And then I'm just going to scale out of my position. All right. Here's another example. Another example. And another example. In this example, it's a long. We're gapping down. I had to wait for 2 blue TTM, and then I would go long. Any questions on this setup? This one is profitable right now. It's been working really great. No, this is how I enter the gap trade. This is how I enter the gap trade. Yeah, not at the open. What I do is I wait. It's a really good question. I don't enter the gap right at the open. I wait for the TTM colors to change on the 50-tick chart. Okay? That gives me my entry. So if we're gapping down, I want 2 blues. If we're gapping up, I want 2 reds. And I'll wait until that happens in order to enter the trade. That's that one. You can configure it. All this little indicator is doing for you is it's looking back 6 bars. And Heikinashi translated from Japanese to my version of English just means balanced on 1 foot. So here's basically what it's doing in layman's terms. It's going lower, 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 calculates the 6 up. It turns blue because it closed above the 50% average true range of the previous 5 or 6 bars. So that's what gives you the color change. If you know how to program stuff, knock yourself out. If you don't, there's the program code for you. Just copy and paste this, and it should work in your programming platform. This one's for TradeStation. If you use something else, you'll have to use some different code, but most programmers can code it up pretty quickly for you. It'll cost you anywhere from $400 to $800 to $900. Okay, and some places you can find it free if you know where to look. All right, so there's another scenario that you can use this indicator for, and it's just to cover a position. So let's say that you were lucky enough to get short off of this initial move to the downside. You're going to stay short until you see 2 blues to cover. Okay, I use this indicator for a lot of my trading just because it takes a lot of my mental mind off of it, so I don't have to kind of crunch the numbers. It just does it for me. All right. Another way you could use it is, let's say you missed this initial sell-off. Then what you're going to do is you're going to let it rotate from red to blue, and then you're looking for 2 reds, red, red. So then you could short that. So it's a really good indicator to use on a lot of different trade setups that you can do. And then here are other versions of the TTM rotation. Since we had the sell-off, we want to short rotations from blue to red, red. Now, I missed this one. I didn't put it on there. That's a losing trade. I want to make sure that you see that. That one lost money right there. Okay? I don't want you to think I'm cherry picking anything for you. Question? I usually just scale out of it. I don't really get out at 2 blues. What I do is I just scale out of it. You know, and these trades would be 10-point stop losses on the Dow index. All right, so let's go through the squeeze trade. So the squeeze trade is a volatility trade. It's actually a lack of volatility trade. It's an indicator that we developed up by watching price action. And the theory between the Bollinger Bands is you're going to have expansion, contraction, expansion, contraction. So you kind of want to get in before the expansion happens again, right? So first you got to figure out where the contraction is. So what we did is we placed Bollinger Bands on there, and we didn't know how to define, like, all right, what's a Bollinger Band squeeze? Is this a squeeze, or is this a squeeze, or is this a squeeze? So first what you have to do is you have to filter out how tight's tight for a squeeze. So a little trick you can do is just throw on Keltner channels on the chart. And now anytime that the Bollinger Bands go inside the Keltner channels, we know that that qualifies as a tight enough squeeze, okay? It's kind of like qualifying, all right? Whether it is actually in a consolidation or not. Once it's in, it's in. Now, that'll just tell you if it qualifies, and if the expansion's about to take place, it won't give you the direction. So we use the momentum oscillator set to 12, and now anytime that the Bollinger Bands come back outside of the Keltner channels and it's below 0, it's a short. So watch this. So here you have the Keltner channels in yellow. They're pretty static, right? They don't change a lot. The Bollinger Bands expand and contract, expand and contract. So in this example, you've got the Bollinger Band went inside the Keltner channel, right? The white went inside the yellow, stayed there for a period of time, and then it broke out from the white, came outside the yellow. When that did that, you're just looking for, right there in this time frame right there, the momentum oscillator was below 0, so that was a short telling you that it was probably going to go lower. Does everybody understand the concept? You can build it in just pretty much any trading platform. Question? Yeah, default settings 20 and 2.0, and the momentum is 12. Yeah. All right, so I got tired of looking at these lines, so I hired some programmers and said, look, here's what my indicator is. Here's what it's doing. Build me something that's easier to look at so I don't go blind before I hit 50, okay? Because just looking for these things are just kind of hard to look at. The lines are, it's just so hard to see. Yeah, the white went inside the yellow. Okay, watch that. Okay, the white came back outside the yellow. So what they built me is they found some open source code on TradeStation Easy Language, and they're like, dude, there's already code that does kind of what you're talking about. I was like, well, let's look at it. And I was like, okay, I want to change some things because mine does something slightly different. So I want to make it, number one, I want to make it work better, and number two, I want to make it look prettier, right? So that I can identify as soon as I'm in a squeeze and as soon as I'm coming out of a squeeze. So now it's pretty much to the point where it's just green light, red light. Red light means stop. Green light means go. If the green light has a blue above it, that's a long. If we're at a red light and then we get a green light, and if it's red underneath it, that's a short. Pretty easy to understand, right? I just try to make stuff that's easier for me to understand, one, and number two, easy for me to use, so I don't have to just sit there and stare at the lines, all right? You can get it. Or you can have it programmed up yourself. It doesn't matter to me. So this is the way it works. Works on a lot of different time frames and markets and stuff. Doesn't work on everything. Make sure you do a little bit of testing and throw it on a chart and go, okay, this does not work at all on this equity. Oh, this does work on this futures contract or gold or oil. And just look at the past 15, 20 signals. You know, if it's working 30% of the time, I would recommend you not take it. Okay. If it's working anything higher than 50%, take it. So keeps it pretty simple. These are some of the signals that are generated. You can see it works across a bunch of different markets. I'm not going to bore you to death with slide after slide after slide and show you how good this is. I use it on a daily basis. I like it. It makes me more money than it loses me. Okay, is what I can tell you. There's a little trick that you can do on just about every market, and this will actually help you filter out when not to take the squeeze and when to actually take it. Put an ADX on your charts. Everybody write that down. ADX, 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 a period of 14. ADX is set to 14. If the ADX is above 20, it means that your market is moving and trending. If the ADX is below 20, it means go do something else. Because all the market's going to do is pick your pocket and burn your cash. It just means it's not trending. It's chopping and flopping around. It's going to cost you more money. And it's going to make your broker really happy, but it's going to grind your account to dust. Okay? All right. So that's one tip I can give you.